In this video, we're going to talk about how to buy an REO bank-owned property. Purchasing REO property or real estate owned, which is what it means, property involves several steps. These properties are owned by a bank or lender, and after falling to sell at the sheriff's sale or foreclosure auctions, we'll cover all the detailed processes to guide you on how to buy these REOs. And we'll also teach you simple steps that you could use and implement to buy REO properties today. And by following these steps and conducting the proper due diligence, you can successfully purchase an REO property, often at discount prices compared to market value. So by the end of this video, you're going to be an expert on how to buy REO properties. Paul, we're going to teach you all the steps in the process. So we're going to cover first, what the foreclosure and REO properties are. We're going to how you research and identify these properties, secure your financing, your due diligence, you're talking with agents, making offers, and then ultimately buying. So me and Paul, we've purchased REO properties for decades across the nation, and now we're going to take you behind the scenes on how we do it and how you could implement it today too. So Paul, let's start off with learning the foreclosure process and what the different steps are, just to kind of level set everyone in this video. And I'll start with it, and feel free to fill in the gaps. But assume you're a homeowner and you lost your job. Let's just say you fell behind on payments. The bank or lender will start sending out letters to the mail for 30, 60, 90-day late notices. This essentially starts the foreclosure process. This is what people call pre-foreclosure sometimes. And from there, after a few months, the bank then will probably start marketing the property, saying this property is going to go up for public sale at the county's courthouse on this date. Once that date happens, the house goes up to auction. If no one bids on it, and then the property that ultimately then goes back to the lender, which is the bank, and that becomes the REO property. So that's the 30,000-foot quick explanation of the different stages in the foreclosure process. Anything I missed there, Paul?
You filled all the holes in. That was perfect.
All right, let's go now to the meat and potatoes of this video. Now that we all have a level set there, let's start off by talking about researching and identifying properties. The main areas, and again, we covered this on previous videos that I could drop into links and how to find them. It's the main sources to find these REO properties with relationships with the banks. There's sometimes you just listed on the multiple listing service or MLS, and you can use Zillow too if you don't have the access to the MLS. And then there's also plenty of different national and regional auction sites out there as well. So, Paul, do you want to kind of talk about some of the where you have the most success finding REO properties out of the categories I just gave you?
For us, it's been mostly the online auctions over the years, right? Whether it's auction.com, Hubzu, or Zome. But before that, even before the online auctions became a thing, it was the online auction before there was an online auction called HUDhomestore.gov, right? That's where we got the majority of the deals over the years. For me, from 2001 till about 2013, I got many hundreds of deals off that. So that's the first and best. Then, there's bid for assets, which sometimes the counties will be selling different parcels of land there. There's at the county repositories, right? The ones that didn't sell at their sale, you can find there. And the MLS is a great resource, right? And the MLS, not just bank owned, but you can really sometimes find an occasional deal there as well, right? That's just listed for sale by owner.
Now that people know where to find them, next is kind of like the research phase. And first, identify where you want to buy. Is it your own backyard? Is it your state? Is it a few different areas? And then get comfortable analyzing properties in those areas. You could easily go to Zillow, start looking at comparable sales for 3-bedroom, 2 baths with this many square feet type of properties in the areas you're at. And then once REO property, you identify them, you could start looking comps. Start with just the neighborhood or development it's in, and obviously, if it's in a city, be more mindful as values could change block to block. But using a free tool like Zillow to determine comparable sales as your initial filter is a great and easy way to kind of filter, pre-underwrite these properties before making an offer. Next step, Paul, I think we want to talk about is after we got the list, right? We've identified properties. We did some research. Next is, let's talk about some financing. How can people purchase these properties before they make bids or write offers if they're on the MLS?
The easiest way, right? We talked about this before, private lenders or another investor that's looking for deals, right? But they've got funds aside. So you bring the deal, you partner together, potentially do some sort of a split, or they just want a certain fixed rate of interest. That's your number one best primary source for funding your deals. Second one will be asset-based lenders. And the more deals you do with these asset-based lenders, some of these companies are Kiavi, Dominion Financial, Lima One Capital, Lending One, companies like that. The more you do with them, the higher LTV they'll go. Like Michael and I, we have 100% financing with Kiavi, with Dominion Financial, and I'm sure I can get it with Lima One Capital at this point as well, and Lending One. Once you have experience and they show you have experience and that you've done it in many, many deals over the years, they're going to lend you more and more money. And then, as you talked about before, we have like, the FHA 203K. There's other home equity line of credit. You could do your life insurance policy. You could even do an IRA, right? There's a lot of different sources to be able to utilize there.
It's great. And for funds that actually don't come from your own source of capital, I would recommend getting a pre-approval letter, whether it's working with another investor or one of those asset-based lenders that Paul just mentioned. That way, when you submit the offer, whether it's to an agent through the MLS or through an auction site, when you make a bid, a lot of times they're going to ask for proof of funds, and having that in your back pocket, whether it's your own funds or a pre-approval letter from one of those asset-based lenders that we just talked about, is also a key thing that you'll need to do when submitting offers.
Yeah, 100%. That's essential. You definitely need that to be able to get approval from the banks.
Yeah. So we now know what areas we want to buy properties in. We got pre-approvals, whether we're own funds or with like an asset-based lender. And we're starting to find some properties that might make sense from a buy, renovate, and resell perspective, let's just say. And once we've identified that, we think we have an answer. We always do this from our own personal business, is to talk to a local expert, find out local agent out there. Paul, what are some ways that you've done to find local agents, especially if it's an area that you're new to?
The number one best resource we have found is using the HUDhomestore.gov website and searching for agents that are HUD approved. And the reason you want those is they're generally agents that work with investors, and they're also much older firms. In other words, you have smaller mom and pop shops, not your Keller Williams, not your Remax, but a small little mom and pop shop that's been there for 30, 40 years and knows the market like the back of their hand. They know all the contractors in the market that you would need to fix up the property if you need to fix it up. They know the cleaners, the people who do the pictures, and everything you would need from A to Z. And you're basically going to manage a rehab or a wholesale long distance through them, and they're going to be your greatest resource.
Yeah, and on top of that, they'll know all the values. They'll know what the current condition, as is value of the property is. They kind of help you out. They'll also know if you do a full scale rehab, everything brand new, this is your top dollar after repair value. If you have a property that's livable, but it's a 1990 style, if you update these certain things, they'll know what kind of that middle after repair value is too. So that's a key component, just like financing, to have on your team when hunting for REO properties.
Yeah, they'll be your number one source, number one asset, and verification for you that it is or is not a deal.
Yeah, exactly. And finally, once you have all these pieces of the puzzle together, you're able to make an offer now. And again, if the property is listed on the MLS, you just work with the listing agent, submit your offer through them. If you use a local agent, you could have the local agent that you worked with submit the offer for you as well. And if you're doing an auction, you could either submit it yourself, or if it's like a HUD home store, you're going to have to find a licensed or certified kind of agent to do that bidding for you. So depending on which avenue you're taking on how to submit the offer is going to be different based on auctions versus just right off the MLS.
Yeah.
And then once we submit the offer, what's the closing process look like, Paul, right? Is there contingencies, earnest money deposits, typical close period? Maybe cover some of those.
Yeah. These are actually really good questions there. People want to know the answers to. So when let's say you get approved, your bid was accepted by the bank. Now you have generally 48 hours to get your earnest money deposit in. And that could be anywhere from $500 if it's a HUD that's under 100,000, or if you're going on the auction properties, it could be up to 5%. I believe it's 5% of the purchase property or 3%. So it could be a decent chunk of change, but you got to get that in within a certain period of time. Select the financing, not the cash, because that'll give you 30 to 45 days to close, where if you do cash, they're going to generally be in that 20 to 24 day window to want to close. So always, this is why it's important to select financing and have a pre-approval through one of these asset-based lenders or lender that you know. Then you 30 to 45 days, you go to closing and you close virtually, right? You're going to have either notary come in there. You could even do an online notary. You'll wire your funds or you'll send overnight a bank check, bank certified check, either of those, and you close on it.
Yeah, great, Paul. That'll help everyone kind of get to the finish line, right? Because you submit the offer, you feel great, but then they accept and kind of what's next, and that's exactly what. So at that point, everything else goes great. Call it 30, 60 days out, you got yourself a new rehab property. Then the real work starts with all the renovations and everything else. So if you guys got a lot of value out of this video, go watch this next video. We created a video called The 7 Steps to Buy at Auction. That's one of the ways we purchase it. And I'll have the link in the description below. Thanks and have a great day.